In this lesson, you're going to learn how to confirm your trend. This is going to be an advanced lesson, but if you've been following me for some time now, you should have no problems. I understand a lot of traders look at trend like this. Higher highs, higher lows, higher highs, and that's completely fine. But if you want to take it to the next level, we need to take it up a notch. And the problem with basic structure is that if the trend is bullish, like we can see here, you can always get caught in these pullbacks. When these pullbacks happen, the trend changes bearish to at least the micro sense, and the trend can always change. So you can never simply just trust your trend based on structure. So what we're going to do here is we're going to limit the distance. We're only going to confirm our trend where the probabilities are in our favor. We're not just going to look at the direction of the market and say, okay, the market is bullish or bearish. We're going to see where the probabilities are in our favor. But before we do this, let's understand what a range is, because this approach requires you understanding what a range is. So where was our previous range? Our previous range was this high right here. And this low right here. This was our range, the high and the low, and price being stuck in the middle. So when price does come back, it will be revisiting our previous range. Now let's say price started going up and made a sharp turn. Now where's our range? Now our range is this high and this low. So this is the range we're operating in. Now price break structure revisits that range. Once that range is revisited, you're looking at the last low, which is this swing and this swing high. Now let's say price break structure and revisits and drops back down. What is our range? This low and this high, and price is operating within this range. So this is something very important to understand before we proceed. Before we proceed, please make sure you like the video and subscribe to the channel. So let's look at the ranges. So right now, what range are we operating in? Our current range is this swing high and this swing low. Why is it this swing low? Because we had a significant pullback from this area, forming a peak. Price rejected from the extreme. So now this is our high, and we are waiting for a low to be formed. Okay, now this is our low. So now this is our operating range. Now price broke. This is our high, and we're waiting for a low. And now this is still our previous low. So now this is our range. What do we have here? We have this low, and this entire thing now is our range. So now we're waiting for a swing high to be formed. Had a pullback, but it came back real quick, so we're not counting this yet. We had a significant pullback. Now this is our range. Now this is our low. I'm waiting for a significant pullback. And this is our high. Price broke this range and pulled back, so now this is our range. Price rejected from the extreme, and so on, so on. So this is just the basics. So to use ranges for your trend confirmations, you need to understand the function of a range. So let's say you have a range right here. Understand that once a range is broken, price needs to retrace before expanding. So always think of your range as somewhere that price needs to visit before completely expanding. So let's cover this one more time. So let's say this is your swing high, swing low, and now this is your range. Have your swing low, swing high. So now once price breaks this level, understand that it's not going to continue shooting up. price will more than likely come back inside of the range and grab more orders inside of this range to continue higher. So understand, once there's a breakout outside of a range, there's always a retracement. There's always a pullback. Again, every time price breaks the range, you're looking for a retracement. You're looking for this retracement. If it doesn't happen, and you do see it a lot of times where price just continues higher, we are not looking at this because this is not high probability. What we are looking for is a retracement. Once the range is broken, you need a retracement back to price and for price to continue after that. Let's take a look at this example. So now you have your range. This is your swing high and this is your swing low. So this is the range you're operating in. So we're looking for a breakout. So now that price broke out of this range, what are we waiting for? We're not expecting price to just continue and start new ranges. We need a revisit. So we're waiting for price to come back inside of the range, at least retest, to then give us clues as far as a few bull candles, and the ultimate confirmation would be a bull candle close. So again, you have a few confirmations. So let's say price retest right here. Price drops down, gives you a red candle, and then gives you a green candle, a green daily candle. This is a slight confirmation. Just not a super high probability confirmation, but it's still a confirmation. Now, the ultimate confirmation would be a close above. Once you get a close above, then your trend is confirmed. But if you do get a bull candle here or two bull candles, this is still a form of confirmation. But the best thing is to have a close above. So once that daily candle closes above the previous breakout, since this is our previous breakout, and then you're expecting a retracement, that break above here and a close is the ultimate confirmation. So now you had your retracement, and we are looking at the initial breakout. We have a bull candle. This is one confirmation. And again, you could start looking for bull setups once you see a green candle, but this is not your highest form of confirmation. The highest form would be your close above. So now you have two green candles. So your trend was correct here on this daily candle. And now you have a complete breakout. So now that you have a complete breakout, you know that the trend is bullish. So we came to this conclusion that the trend is bullish, not because how the basic market structure was looking prior to this. We're not focused on this. Even though this is good context, we are looking at what happened right here. So let's take a look at this example. As you can see, there is a change of character. And we can understand that the trend wants to go bullish, but we cannot confirm that. We have no confirmations. So this is the range. This is our swing high, this is our swing low, and this is the range we're operating in as far as the daily time frame goes. So now we have a break. So what are we waiting for? Now that we have our break, we are waiting for a retest. This break does not mean price will continue higher. Absolutely not. We're waiting for a retest. So now we have our retest. So once you have your retest, you look at that previous breakout and you mark it. So now what we're waiting for is once price breaks above this level and closes, we can say now we have a confirmed trend. Until when? Start marking your swings. These were previous ranges. If you look at all these previous ranges, you look at the extreme right here. You can extreme of this range and you can look at the extreme of this range. So once you do that, you mark up your extreme. So obviously here, this would be your extreme. Let's make it red. That's one. Now, this is your other extreme. Extreme is your top 25% or your bottom 25%. Obviously, in this case, we're looking at the top 25%. So we have a bullish trend up to this point. So let's see. The candle did not completely close above. Now we have a close. So now we have a confirmed trend until this point. This is our first point of danger. Price can always reverse from here or anywhere close to this level. So I always say if you have a wide range where you can trade from here all the way to somewhere close to your danger zone, that's completely fine. Here, price can always reverse. But now you have your confirmed trend. And now, as you can see, price is reversing and forming a new range. So now you start this process all over again. So here we have a different example. And I know this was a question you were wondering from the previous two examples. So let's say price does not close below the range. So the initial breakout was not a close. What do you do here? Well, it's the same thing. So you would still mark it as your peak that you need to be broken. So basically, this is still a peak that you need price to close below. Why? Because it doesn't matter if it was a close on the initial breakout or not. It's the fact that price visited this level, found rejection, and came back. So price came to this level and pulled back. So the motion already happened. So what you're waiting for now is the close below to confirm that this is your trend. As you can see here, price did not close below. Price did not close. Price just visited this area, but did not. The daily candle did not close below. Now you have a close. So now look to the left. What is a level of resistance? Let's look at a previous range. You had a swing low and swing high right here. Oh my God. We had a swing high and swing low right here. Price is basically at this level. Let's look for a deeper one. Price already visited this level. Yep, this is a fresh discounted level. So now you have your bias, your trend confirmed all the way until here, unless there is another range formed. So unless there is another clear range formed, and then you'll start looking for another confirmation. But until then, your target is right here. And your trend is confirmed. And of course, if anything, at least you know the next few days or a week will be bearish. And that's how I personally look at trends. This is how I find my daily bias or weekly bias. And here you have a new range. So this is when you pull out your low and you pull out your high. Now you have your range and you start the same process again. Hope you guys enjoyed this lesson. Make sure you like, share, and subscribe, and make sure you visit our website and use code ETMARMY for 20% off. And let us know in the comments, what lesson do you guys want next? Till next time.